Hello, and Happy New Year. Welcome to the January 2022 Economic and Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. The year closed on a strong note in December, with stock markets up across the board. After a weak November, both the Dow and the S&P showed strong gains, and while the Nasdaq struggled a bit, it did close the month in the green. Internationally, developed markets did well, while developing markets showed gains to reverse some of the losses from earlier in the year. For the quarter and the year, the U.S. also did best, followed by the developed markets, all of which were up substantially, but emerging markets ended the year down slightly. Fixed income assets were mixed as interest rates crept up, with small losses for both December and the year as a whole. And what drove these results was a combination of two things. On the medical front, the continuing threat of COVID, especially the new Omicron variant, and on the economic front, the Fed's slow process of normalizing monetary policy. As we close the year, the Omicron variant drove COVID cases to new highs, but so far at least, the increase in hospitalizations has been smaller, suggesting that earlier reports that Omicron is more contagious but less damaging may be correct. It's too early to tell on the medical front, but on the economic front so far, signs are that the damage is much lower than the case count numbers would suggest. So while we need to keep an eye on this, the medical risks remain very real. The case counts may not be the best indicator of the economic risks. And we can see this in the numbers. Even with the Omicron wave, both the population and the economy have become more resilient. Right now, for example, the economic data keeps getting better. While the November jobs report was a bit weak, that looks to be more due to a shortage of workers than a lack of labor demand, as shown by the continued decrease in layoffs. Consumer confidence numbers have bounced back up, beating expectations, and consumer spending has kept growing. Similarly, while businesses are worried about both labor and supply chain issues, both confidence and investment are still very high. So while the economic risks may certainly rise again, they appear to be relatively low right now. And the Fed's decision to further tighten monetary policy is a ratification of that positive trend. The key question going forward is whether the economy has enough momentum to keep growing through the Omicron wave until we bring the virus fully under control. And so far, the answer looks to be yes. The country remains open, and job and spending growth have stayed healthy through both the Delta waves and so far through the Omicron wave as well. So given all of that, the recovery looks very likely to continue through the rest of this year and may even accelerate further. So while medical risks are still real, the experience of the past year suggests the recovery will survive the Omicron wave as well. Now, that's not to say we're out of the woods. While the impact of a tighter Fed and the Omicron variant have been modest so far, the market pullback at the end of November is a reminder that risk will affect both the economy and the markets going forward. We will likely see more volatility as more risks surface, and there are more risks out there. But as we move into the new year, the bottom line is that despite the risks of the Omicron wave, the economy is still growing. And that's what markets are seeing as well as they stay close to their all-time highs. Real medical risks are out there, but they're risks that can and will be contained. And despite those risks, growth remains healthy and may even get stronger. So while we do need to be cautious, as of right now, it looks like things should keep getting better this year. That's it for this update. Thanks for watching. Join me in February for the next one, and until then, be sure to check my daily blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. We are getting through this together.